All right, let's dive right in. Looking at the market close for Tuesday, April 15th, 2025. S&P 500 around 524.39.
Yeah, and the Dow Jones near 407.16.
NASDAQ hitting about 69.40, so decent numbers there.
And then you look at crypto, Bitcoin surged, didn't it? Up around $86,350.
Wow. And Ethereum around $1,654. Quite the jump for both.
It really is. And, trying to keep track of all these moves, understand what they actually mean, it can feel pretty overwhelming sometimes.
Absolutely. That's exactly why we're here. Think of this as your shortcut, your way to cut through the noise.
We're pulling insights directly from the PAI morning briefing from PantheonAI, dated today, April 15th.
And our mission really is to pull out the key trends, maybe some surprising details, and the expert views to give you a clearer picture. What's driving things? What are the implications?
Okay, so let's start unpacking. One theme that jumped out from the briefing was this idea of gradual stability amidst volatility.
Sounds like a bit of a contradiction. Stability and volatility.
Well, yes and no. It captures the feeling, right? We are seeing these steady gains in the broad indexes, like the S&P ticking up maybe 0.5%.
Okay, slow and steady.
But underneath, there's still that churn. The briefing suggests investor sentiment is, well, buoyed. Helped by good corporate earnings, maybe some geopolitical tensions easing off a bit short term.
So the big picture is looking a bit more confident, even if day-to-day is choppy. That S&P rise, even if modest, points to confidence in the blue chips.
Exactly. It signals some underlying belief in those major companies. And for listeners, this kind of market, well, it suggests maybe finding a balance. Not too aggressive, perhaps, but recognizing that steady potential.
Makes sense. And talking about confidence, the NASDAQ jumped nearly 0.58%.
Yeah.
That feels like continued faith in tech innovation, doesn't it?
Oh, absolutely. Investors are clearly still interested in the future of tech.
And that flows into crypto, too, right? Bitcoin up over 2%, Ethereum nearly 2%.
Precisely. Even with all the volatility we know exists there and the ongoing regulatory chat, there's still this sustained confidence.
And here's something the briefing really highlighted, something we at PantheonAI definitely track closely. It's this growing link between traditional finance and, well, fintech, including crypto.
It's less and less about two separate worlds, isn't it?
Definitely. The key thing for listeners, I think, is seeing major institutions, big asset managers, actually using digital assets now, putting them in portfolios.
Yeah, it's moving beyond just a niche interest. It's becoming part of a diversified strategy for many. And this convergence, traditional finance exploring blockchain, that's a massive trend to watch.
Okay, let's pivot slightly. Individual companies. Bank of America, big news there. First quarter profit jumped 10%.
Yeah, beat Wall Street expectations quite handily.
What drove that? The briefing mentioned deposits.
Growing deposits, yes, and also really strong performance in sales and trading revenue. That suggests clients were active, maybe taking advantage of some of that volatility we mentioned.
So they navigated the choppy waters well.
Seems like it, but...
There's always a but, isn't there?
Well, the interesting part was CEO Mr. Moynihan's comment. Despite the good numbers, he gave a warning. Said they need to prepare for a, quote, changing economy.
So celebrate the win, but keep your guard up. That's quite a message.
It really is. It raises that question for investors. Is this current strength just a blip, or are there bigger challenges coming that Moynihan sees? It's that mix of good news now, caution for later.
And that ties into what others are seeing. Jim Cramer's list, his top 10 things to watch, apparently included Bofer and also Citi.
Right, pointing them out as companies topping estimates even with headwinds. It's useful to see which specific names are catching the eye of market watchers like Cramer. Offers maybe more actionable thoughts for people.
Okay, but here's where it gets a bit confusing maybe. The briefing also mentioned multiple surveys showing fund managers. Well, they've suddenly become quite pessimistic about U.S. stocks.
That is a stark contrast, isn't it? We see good earnings from a major bank, tech holding strong, but the big money managers are getting nervous.
Why the shift, does the briefing say?
It points towards the Trump administration tariffs. Seems they're introducing unexpected hurdles, making fund managers reassess the risk.
So for our listeners, this is a big question mark. Is this just fund managers adjusting their models for tariffs? Or is it a sign the market's starting to really feel the pinch from those policies?
That's the crux of it. Are they seeing something the broader market hasn't priced in yet? Or is it maybe just temporary caution? The speed of the shift is interesting, too. Suggests maybe the tariffs weren't fully baked into their outlooks before.
Right, a potential blind spot maybe. Okay, let's look at Johnson & Johnson, another company story.
Yeah, J&J. They raised their sales outlook despite tariff costs, they beat profit and revenue expectations, and they raised their dividend.
Sounds like a home run. Everything positive.
Pretty much textbook good news, yes. But here's the kicker.
The stock price didn't jump.
It actually pulled back slightly.
Okay, that is counterintuitive. Why would that happen? Too good to be true. Profit-taking.
Could be a bit of both. Maybe investors thought, okay, great news, time to lock in some gains, especially if they're feeling cautious about the broader market, like those fund managers. It shows strong fundamentals don't always equal immediate stock pops.
Fascinating. Okay, let's zoom out again. Sector view. Technology, we touched on it with the NASDAQ, still looking resilient?
Very much so, according to the briefing. All that investment in R&D, the excitement around AI, machine learning, it's fueling growth expectations. Silicon Valley is still that bellwether.
But there are always risks, right?
Yeah.
Regulation,
Yeah.
supply chains.
Absolutely. Those are the potential headwinds to keep an eye on. They could definitely impact profitability down the line.
Okay, what about energy? The briefing called it a crossroads. What's going on there?
Crossroads feels right. You've got geopolitical tensions messing with supply. You've got shifts in global demand. And, of course, the huge debate and transition towards renewables.
So it's pulled in multiple directions.
Exactly. You see traditional energy players operating alongside this massive push into green energy. For investors, it means weighing the risks in fossil fuels against the opportunities in renewables. It's complex.
And finance. Beyond Bank of America.
Well, it's a mixed bag. Buffet shows that big banks can adapt and do well right now, leveraging things like trading revenue.
But then you have the fund manager pessimism.
Exactly. That hangs over the sector, too. Concerns about potential overexposure to U.S. stocks, the impact of policies like tariffs. It's a reminder that fundamentals matter, but sentiment and macro factors are huge. Careful assessment is needed.
It really brings home how connected everything is. These U.S. trends, they don't happen in a vacuum. The briefing called the global market a giant complex web.
That's a great way to put it. U.S. tech adoption influences emerging markets. U.S. fund manager caution affects sentiment in Europe and Asia. It all ripples outwards.
What about future predictions from the experts in the briefing?
Yeah.
Any key themes?
A few stood out. One is definitely more integration between traditional finance and crypto, that convergence we talked about. Expect more of it.
Okay, crypto becoming more mainstream in portfolios. What else?
Strong growth predicted for healthcare and biotech, driven by tech advances, yes, but also just the reality of an aging global population.
That makes sense. Demographics are powerful.
And finally, this idea that digital transformation, which people have talked about for ages, is really hitting its stride now across many industries.
Okay, those expert views raise some big questions for listeners, don't they? Like, could this crypto rise actually change how we define a stable investment?
That's a fundamental question to chew on. Is the definition broadening? The performance certainly suggests growing acceptance.
And with banks like BofA, are they just riding a wave, or should we pay close attention to Moynihan's warning about the economy changing?
His caution definitely adds a layer of complexity. It encourages looking beyond just the current good news, what might be coming next.
And the fund manager pessimism, is that a warning sign to be cautious? Or maybe, just maybe, a contrarian buying opportunity?
That's the million-dollar question for anyone managing their portfolio right now, isn't it? It really depends on your own outlook and risk tolerance.
The briefing also talked about the global interconnectedness, again, digital and traditional economies weaving together.
Yeah, and the implications are huge. Potential benefits for emerging markets from tech and green energy investment for sure.
But also risks, right? Trade debates, policy uncertainty. It creates this mood of, what, cautious optimism.
That seems to be the prevailing feeling globally. It's this constant balancing act, this sort of dance between risk and reward, especially between developed and emerging markets.
Okay, let's try and boil this down. Key takeaways from this morning's briefing for everyone listening.
All right. First, major U.S. indices are positive. Good start.
Second, Bitcoin and Ethereum showing real strength. Crypto confidence persists.
Third, Bank of America's strong profits, but with that important note of caution from the CEO about the future economy.
Fourth, Jim Cramer's insights giving specific companies to watch, like BofA and Citi.
And fifth, maybe that analogy, the briefing used the market as an orchestra.
Huh, yeah, I like that. All the sectors playing their part, and if one goes off key, you hear it everywhere. Really drives home the need for diversification, doesn't it?
Absolutely. And sector-wise, just to recap, tech's growing, but watch for challenges. Finance fundamentals matter, but sentiment is key. Energy's transition is both risk and opportunity. Healthcare is critical to watch, and everything is globally linked.
So as we wrap up, the real question shifts to you, the listener. What does all this mean for your portfolio, your strategy?
Yeah, time for some personal reflection. Should you rebalance? Are there new opportunities here worth exploring? Or, with that fund manager caution, maybe it's time to think about taking some profits.
It really comes back to what leaders like Moynihan said, being prepared for those shifting sands of a changing economy.
Exactly. And that's where having good information, good analysis comes in, like using Pantheon AI as your information co-pilot, helping you sort through these narratives.
We really appreciate you joining us for this deep dive today. Hopefully it provided some clarity.
Yeah, definitely share your thoughts or any questions you might have for the AI co-pilot. We're always interested.
We'll be back soon with another deep dive, unpacking the latest developments.
Until then, stay curious, think boldly, keep those portfolios diverse, and keep your perspectives wide.
Happy investing, everyone!